In this presentation, we will review the financial statements, balance sheet, income statement, or profit and loss after entering the payroll for September, the second month of payroll for our payroll problem. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We've got the open windows open. You can open the open windows by going to the view drop down and selecting the open windows list. We're going to go to the reports by going to reports up top. We're going to go to the company and financial and take a look first at the balance sheet. Scrolling down to the balance sheet and selecting the balance sheet, changing the date range, go into the customized reports to do so we can see the detail within it. 01/01/21 to 12/31/21. January 1st to December 31st, 2021, and OK. So here is our information. Once again, the checking account will be affected, of course. We don't have any cash in it, so it's a big negative now. We're paying payroll that we don't have, but that's okay because we can see exactly what's going on with this minimal amount of information in our QuickBooks. So let's double click on the cash account, and we can see the activity so far. So we've got the payroll for the first payroll. It's going to list out by check, and if we want the detail, we got to basically go into those checks. Then we paid the first payroll in terms of the checks, the liabilities, meaning we paid the paychecks, and then we paid the liability related to what we withheld and the employer taxes. And now we paid these paychecks. These are the net check. Remember that if we go into any of these, we got the 21,564, for example. And we see the net check here. If we go into the check, it's not the gross pay, it's the net pay. So that's what's going to be out of the checking account. And then if we go down here to our liabilities, then now we have these liabilities, and this should line up to the liabilities we have in our Excel sheet as well. So when we processed the Excel sheet, we saw that we had FIT, federal income tax, when we do this by a journal entry, of the 8,404, the HI of the 1,394. I increased the font a little bit here. And then the OASTI, Social Security 5961, and the FUTA, and the group insurance, which we're not paying out, so that's going to accumulate over the 2 payroll periods. It hasn't been paid yet. Retirement, SUTA, and the union dues. So if we were to take a look at all this information that we had on the Excel sheet, similar type of information, and we were just to add up all these liabilities, then adds up to 32,929, which is the equivalent here, off by some pennies. So there's the 32,929 there. These are our liability. If we go into any one of these, this is the FIT. We'll notice once again that we had the payroll for the first payroll we ran, September, payroll in October, these being one specific component of that payroll. Then, of course, we paid it off here, bringing the balance back down to 0. It's just like an accounts payable account, an AP accounts payable account where we would incur liability or like a credit card, and then we would pay it off. So then it goes back down to 0. So now we're incurring the liability again. But if I want to see the detail, I'd have to go into this 187, double click on it, go into the paycheck and say, what is that? Where is that 187? It's coming from here. There's the 187. So you got to go into it and actually kind of piece work it out. It's not a journal entry. We can't really see directly where it's coming from. QuickBooks is doing some behind the scene works to really put this together in a way that they think and does, give us a lot of information and still kind of make it easier to navigate. But it's not exactly a journal entry, so we can't see exactly how it ties out in the same way we might with just debits and credits. So if we close this back out, then we can see it. So that's going to be the liabilities. If we go then to the income statement or profit and loss statement by going to reports drop down, and we're going to go to company and financial and the profit and loss now. Dates of 01/01/21 to 12/31/21. And here's going to be our payroll information here. Now, if I just go to the beginning date, 10/01/21, then we're just going to get the payroll for that time period. It's not going to include the entire year, in other words. So we could just say 10/1 to 10/1. That's when we processed the payroll. So for the second payroll. And we can kind of compare that then to what we did on the Excel sheet, and we can better see what happened just for one payroll period. So notice what it does here. It grouped everything once again into payroll expense, whether it be payroll expense or whether it be the payroll taxes. And the reason that's confusing is because remember that it's really pulling out the payroll taxes should only be the employer portion. So if we were to see this in our Excel worksheet, we had two numbers. One's going to be the payroll, the other's going to be the taxes. The payroll is made up of the gross of the gross pay, and not net pay. And then the taxes is what we had to pay on over and above it, the employer portion. So if we add these two up, then that adds up to the 106.91 for the year to date. And then if we add these two up, that's what happened this time period. That's the 52,343.67. So if we go back over here, we have the 52,343. It's off by some pennies because of rounding. If we double click on this number and zoom into it, we'll see the detail here. I've currently got the font at 11. So I'm going to make this a little bit larger. We're going to reduce the memo. Don't need the memo. And so these are all paychecks, of course. So these are all paychecks. If we look at this, the current paycheck that we are in is the 10/1 because we're just looking at this one time period. If we change the date to the beginning of the year, we'd have a lot more detail. We'd have twice this much about. And so note that this is just one payroll with 4 employees. And we've got this many activity for the first employee, this much for the second, and this much for the third. And remember what it's breaking out here. This is the gross check. So for Anthony here, if we go into this, it's just overwhelming amount of data here. But if you break it down, it's not too bad. We can say, okay, what are they doing? If you go into here, it's going to be the gross pay. So that's the gross pay, not the net. This isn't the net check like we would see in the cash account. And then under here, we have the 112 and the 259 and the 60. Let's see what those are. We got the 112 is part of the gross pay. So these two are the gross pay. And then the 150, it was the 259 and the 60. And so these three then are going to be the employer portion. So my point is don't get them mixed up with the employee portion over here. So this is the Social Security, this is the Social Security. This Social Security is going to be paid by the company out of the checking account, but it was really paid by the employee. In other words, the check's coming out of the company is going to write the check, but it was earned by the employee, wasn't given to the withholding, but was taken from them. That's being recorded as their earnings under the gross pay. And that's why this portion is the employer portion and therefore the payroll tax portion. So we're going to close that back out, close that back out. So that's going to be the detail here. And again, it would be more proper in some cases to pull out those payroll taxes. And in order to do that, it's very difficult here because it's not grouped by whether it be employer or employee portion. It's just grouped by who we paid for. And so note that if we wanted to pull out the payroll taxes, the employer taxes, it's a little bit difficult, but you can see it. You can weed out what those items are if you analyze this report and go through each line item and or use other reports, of course, within QuickBooks to do so. For more accounting information and accounting courses, visit our website at accountinginstruction.info.